bit. I'm delighted to pass on now to our good colleague Pierre Monnin from the Council on Economic Policies, who is going to give us some reflections on the central bank role here today. So, Pierre, over to you.
Thank you, Roland. It's a pleasure to be part of this panel. As it was highlighted several times in the previous presentation, if we want to move to a sustainable economy after this crisis, it will require the effort of all of us, of several stakeholders, governments, financial markets. But I would like to focus today on what can central bank do, and I think what central bank must do to guide us or lead us to this sustainable future. Now, let me start with a picture of what is in front of us. And obviously, this is not a picture that describes a sustainable future. And this is not, a boat that we would like to embark on to sail this ocean with such tsunami in front of us. I would like to focus on the last wave, on climate change, and to tell you a bit how central bank can help decrease this wave and then make the ocean a bit flatter and sailable for all of us. Let me first tell you that most of what central bank can do has already been described by both Isabel Schnabel and Sabine Mauderer. I would like to emphasize that the solutions are there. What is needed now is action, and it's action now, because the longer we wait, the more difficult it will be to reach a state that we would like. What do we know about the climate change risk in front of us? I think most of you have read the excellent work of the NGFS on that, in which the European Central Bank and the Bundesbank are part of. So this group of more than 60 central banks and regulators have given a very good description of what lies in front of us. And the conclusion are clear. Climate change risk are material for all agents in the economy, including financial markets. These risks are foreseeable and irreversible. They will materialize in the future in one form or the other with certainty. So we know what will happen. And most importantly, what will happen, the path that we will take depends on short-term action. So including the short-term action taken by central bank. Let me be a bit more precise on where do we go. So there are several paths that are possible for us now. So it's a business as usual scenario where nothing changes, and we end up with a global warming from 4 to 5 degrees, and you have what is currently planned by policies, which end up in a 3-degree world, or there is a transition that is happening where we end up in 1.5 to 2 degree global warming. So that's the possibilities that are in front of us, and clearly what we would like to happen is the transition. And this, we would like to have the transition for 2 reasons. First, it's the option that minimizes the cost for our society. And I think most importantly for central banks, it's also the path that is consistent with the lower risk for financial markets. So I think all central banks have a role in terms of financial stability. They have a mandate of guaranteeing or improving financial stability. And if you want to stabilize financial markets regarding climate change, then the best way to do it is to have a transition. And this is not new. it has already been highlighted by the European Systemic Risk Board, ESRB, in 2016. That's already 4 years ago. And this report was clear in saying a transition is the future that leads to the more stable markets. And we not only need a transition, but we need a smooth and early transition. One of the worst scenarios that we can have is to have a too late and too sudden transition. And I think the COVID crisis really showed us how like sudden and sharp transition from one state to the other, from normal economy to a lockdown, when we have a sharp transition from one system to the other, how dangerous it is for our financial system. And we are in the same situation with climate change. What we would like is a smooth transition that starts now, and that's why, and it can only start now if policy choice taken now are fostering the transition to a low carbon economy. So that's basically what we want, and the question is, do central banks lead us to or foster this transition? And my answer would be no right now, because and especially after the answer of the ECB and other central banks to the COVID crisis, what we have seen after the crisis is a bit more of the same tools that were used in the precedent crisis in 2009 and 2012 for Europe. And these tools are very good and very efficient to avoid a recession, to stabilize market, but they are not aligned with the transition. What we have seen in the past, and that's all studies that I'm showing you now, and I think what the ECB has done with the COVID crisis is a bit of the same, is that the asset purchased by central banks are biased toward sectors that are polluting. And this reflects not the choice of the central banks, but it reflects the state of the market. And the neutrality choice that Ms. Mauder was saying was highlighting leads to basically copy the market, and we know that the markets now are not aligned with the transition. So what can central bank do to change this situation? I think there is one thing that the ECB and other central bank absolutely must do right now, is to take into account climate risk in their monetary policy operation. So asset purchases, collateral operation, and refinancing operation. And one reason why they must do that is that basically the ECB has committed, as its own guideline says, that they should implement monetary policy by taking the minimum exposure of the balance sheet. And what we know, and that's also been highlighted by several bodies, is that financial markets are very bad now at pricing climate risk. So the prices and the indicators and the information used by markets to price climate risk doesn't reflect this climate risk. And I'm not the only one saying that. This first sentence that you see here come from, again, the European Systemic Risk Board in his last report, and the NGFS says the same thing. Or I can also cite the Bank of England that really say that financial markets, financial institutions now have a gap in assessing climate risk. So on one side, you have central banks saying financial markets do not integrate climate risk into their, really integrate climate risk and they should do it. They should protect their balance sheet against this climate risk. And on the other side, you have ECB relying on the same information as financial market to manage the risk on their own balance sheet. It's like, for me, it's like if the CEO of one big banks, let's say Deutsche Bank or Paribas, saying we know that there is a risk in front of us, but we don't do anything to protect our own balance sheet, and that's a bit of a contradiction. And I think people at the ECB are very aware of that. You have here two citations from Christine Lagarde and Jens Weilmann, who say that they should re-examine collateral to integrate climate risk, and they should really ask themselves questions about the climate risk that comes with the assets. So there is an awareness, but I think what is needed now is not only, actions are better than words. So the ECB must act now on that. And for me, it's clear they should act now, because I think it's their fiduciary duty to protect the balance sheet of the ECB against climate risk, against undue losses. And I see no excuse for me not to do it now, because there are usable climate risk metrics that are available on the market already. I can cite you more than 20 data providers that provide such metrics. Of course, they are work in progress, but they are already advanced enough for investors to use it, including ECB. And I think one precautionary principle would be to say it's better to use imperfect risk metrics than not to use any risk metrics and miss climate risk. So I think there is no excuse now from any central bank not to already start including this risk by using the risk metrics that are available now. And I would say that the ECB risk management framework is actually very fit for including these risks. As it was said, the ECB rely on rating agency, but also on internal risk assessing framework, on counterparty risk assessing system. So there is a panel of information that the ECB is using for risk assessment, and they can mix these sources of information as they want. It's allowed to assess climate risk, and I think there is no need to change anything in the framework or the institutional framework of risk management at the ECB to already take climate risk into account. So for me, this is a must. Now you also have some other proposition that were also mentioned. I think the ECB should use all its policy tools to foster the transition. And why the ECB should do that? Because the ECB has a mandate of financial stability. And as we have seen, the most secure way to guarantee financial stability on markets is to have an early and smooth transition. So whenever the ECB is implementing a policy, it should also have this financial stability mandate in mind and say, well, if this policy help the transition, it will help financial stability. And that, in addition to the primary mandate of price stability, as was mentioned by Isabel Schnabel, it's the financial stability mandate. And on top of that, I will not go into details, but it's also part of the secondary mandate of the ECB to include the environmental goal. And I think for that, all monetary policy operation can actually now reflect climate consideration. You could have climate consideration in the choice of your asset purchases. You can add climate consideration in targeting long-term refinancing operation by saying, for example, that banks that do not that lend to polluting sector, for example, are will not get a good condition in TLTRO. It can be reflected in the collateral framework. And by doing so, the ECB would steer a bit the market and realign it on the transition, which is a good thing for financial stability reason. So let me conclude with what I think the ECB must do. As I said, the ECB and any central bank, I'm saying the same thing here in Switzerland. The ECB must integrate climate risk into monetary policy operation. It's a fiduciary duty. It's feasible, and it can really start. Some investors are already doing it. Not all of them. So there is no reason why to delay this integration for 1 or 2 years. And I think the ECB should also reflect climate consideration in the implementation of monetary policy, essentially for financial stability reasons, because a transition to a low carbon economy is the best way to protect financial markets against instability. And finally, I would really like to emphasize that any delayed action on climate risk from the ECB would only worsen the situation for financial stability. So the more we wait, the less likely it is that we will have a smooth transition. And as the ESRB highlighted, a too late and too sudden transition is really the worst scenario that we can have. So the ECB and any other European institution, when taking decision, should have that in mind and see if there is not a way to have one policy tools that can be also used for the transition. So let me conclude with that. I'm happy to see the reaction after. Thank you.